What do you think right now about the state of inflation? Does the Fed have room to do that or not? I mean, right now the Fed doesn't seem that it does have room to do that because obviously it's paused.
Yeah. And I believe we've been when you look at it from a cyclical standpoint, it's more difficult to see this, but when you look at it from a secular standpoint, I believe we've been in an era of fiscal dominance for quite some time now, which is
Hmm.
essentially the Fed is not able to do what it thinks is right for its dual mandate because it has to do what's right to support what the government is doing. And when you look at the longer term trajectory of the Fed balance sheet and the longer term trajectory of the total debt to GDP, it's one for one. Total debt to GDP is rising. The Fed is being forced to monetize it, and that's what's gone on over the last 15 years. So we have these shorter term periods where the Fed says, "Oh, we're not monetizing the debt. Watch, we're going to do quantitative tightening," and then
Hmm.
now they're forced. And so this is what I worry about is yes, inflation is not going back to target. We still have median CPI at 3.5% year over year right now, and it's potentially bottoming at 3.5. And median is probably the best measure, I think, of the overall trend in inflation, right? You get the other measures that are much more volatile, but median is a really good measure of kind of the breadth of inflation. 3.5% today, and it looks like it's bottoming and turning higher. So Fed inflation's nowhere near going back to the Fed's target in a sustainable way. Even still, they may be forced, and this is what I think a lot of policies intended to do, to force the Fed back into monetizing in order to keep interest rates lower. And I think they probably will be. One thing we mentioned a year ago when we spoke, I mentioned was we could see uh, the economy go into recession and interest rates go up.
Hmm.
And that was part of this supply-demand dynamic, is that what happens in recession? Revenues come down, so supplies of treasuries actually accelerate the supply growth to make up the difference of falling revenues. The Fed cannot, we cannot, as Americans, allow that to happen. If we go into recession and interest rates go, 5, 6, 7, 8% on the 10-year treasury, that, is what we're talking when we're talking about debt crisis type of issues. So that where it doesn't matter what inflation is, the Fed has to come in
The
and
Fed has to step in and buy.
has
Okay.
to step in and monetize. And I think
Okay.
that's potentially where we're headed.
All right.